Good morning.
Hey, good morning.
Whether you're on your smartphone, tablet, or desktop.
Good morning, Yolanda. All right, we'll wait about 1 or 2 more minutes and then we'll start. All righty, we'll get going. I'm pretty sure people will continue to, yeah, there. People are starting to come in little by little, but we will start. First off, good morning, happy Monday. Um, Happy Father's Day to all the fathers in here, I think it's just Donald in here today. Um, but happy Father's Day. Hope you all had a great weekend.
Let me
We
tell you the
did.
good part. I
Sorry, I did. Let me mute people in here. So sorry we couldn't have Monday Mortgage Minute last week. Quick story time. I'll make it brief with my son. He's okay, thankfully. Much better than I was. He found a hoverboard in the house on, I think it was like on Friday or Saturday. And he went outside on Sunday to watch it. And we were in the house. He usually goes on the driveway on the side. And we were in the house cleaning and stuff, and we had the door open, and we heard a loud screech. So we go outside to go see him, and he's walking towards us with his whole knee busted. Like I saw his bone and everything. It was not a great day. So we had to go to the hospital. Thankfully there was no broken bones, no tendon damage or anything. But it was probably the worst thing I've seen in person, not in video. But he's good. He gets his stitches off this Thursday already. Um, and he'll be able to know, move his leg around. So right now he has a knee immobilizer, so he has to keep his leg straight. But he ended up being okay, thankfully. But I mean, that all the adrenaline from that Sunday wore me out. I was so tired on Monday that I ended up coming into the office. I worked, but it was a tough day. Hold on, because I'm trying to mute my camera. I'm gonna show everybody here. Oh, okay, no, that's the speaker. All righty. But we'll start with the news for the last couple of weeks. Jobs report helped rates come down a couple of weeks ago. ADP's employment rate report showed that private payrolls rose less than expected in March, as employers added 152,000 new jobs as opposed to the 175,000 that were forecasted. So we know that high rates and high home prices are killing affordability. So pay increase has to play a big part. Job stairs are showing 5% increase year over year. So and while job changers are showing 7.8%, which is actually lower than the previous report, which showed 9.3% year over year. You're usually seeing that people that stay within jobs or stay within their jobs get paid less year over year than people that switch jobs. CoreLogic reported that as of the end of Q1 2024, home equity increased 9.6% or $1.5 trillion from last
That's
year.
so. I'm gonna tell you what she told me. She said because I was
Oh,
like,
okay.
we
Sound like
usually
it's
don't
on
send.
Sierra. The number of homes that are underwater continues to decline. From Q4 of last year, homes with negative equity decreased by 2.1% or almost 200,000 homes, moved back into the black. Negative equity decreased 16% year over year. And if home prices rise by 5% this year, another $100,000 homes will regain positive equity. This is a good number, especially for people that do the down payment assistance stuff, the hometown heroes, where you're coming in with 100% or a little bit more than 100% financing. This is usually this is a nice little report to understand that you're going to be upside down when you first get into it, but you will eventually get into the black and into the green as appreciation continues to come into play. And I don't think I made the note of it here, which probably would have correlated very well with this report. But there's there also, I think there's a report with like 150 of the top U.S. economists showing that within the next 3 to 4 years, they believe that appreciation will continue to rise anywhere between 3 to 5%. The middle number there is the 4% continuously within the next 3 to 4 years, and cumulatively see an increase of about 20% appreciation within that time span. So people coming in, you know, without or with 100% financing a little bit more, they're going to see that positive increase little by little as time moves on. Like I mentioned a couple of weeks ago, right? When rates start to drop, if they start to drop relatively soon, they may not have that equity to do the refinance right away. But they will eventually get there because as rates drop, you're going to see home prices shoot up, and that'll help with their appreciation year over year. So it's just a timing thing for them. CPI report showed that overall inflation was 0% for the month, which was cooler than estimates of 0.1% year over year. Inflation decreased from 3.4% to 3.3%, which was softer than the estimates of pretty much an unchanged reading. And that helped rates shoot up last week as well. So core CPI is also down 3.4% year over year. You guys know core strips out food and energy. It's still really elevated due to shelter costs primarily at this point. There's two main readings within shelter costs. One is rents, which rose 0.4% last month and are up 5.3% year over year, but down from 5.4% in the previous report. Owner's equivalent rent, which is the cost of home ownership, all in rose 0.4%, and that's up 5.7% year over year, which is still also down from the 5.8% in the previous report. So you're seeing that home ownership costs are higher year over year than rents are. Probably why you're seeing a lot of people sticking to renting right now as well. PPI, which measures inflation at the wholesale level, fell 0.2%, and that was lower than the 0.1% rise expected. We saw a decrease year over year from 2.3% to 2.2%. Mortgage apps saw an increase of 16% last week as rates declined for the first time in a month. Interest rates also fell from 7.07% to 7.0%, and we're still up about 0.25% higher than last year. So if we're at 7.02% last week, that means that last year's beginning of June was at 6.75% interest rate. We have hit a hard ceiling with mortgage-backed securities, and we've kind of been floating in abyss the past few days. But if we break through that ceiling, we can continue to see big moves down. What I have been seeing, and I think I mentioned this again also a couple of weeks ago, is that spread between the 10-year Treasury and mortgage-backed securities is thinning, which means that even though the 10-year may increase, usually what happens is when the 10-year increases, rates increase as well. That spread is shortening to about that 200 basis points, which is historical, which means that as the 10-year is rising, rates are not pushing up that as high as they should be, or as high as we've seen within the past couple of weeks, which helps us keep rates at this stable level. Initial jobless claims, which is people filing for unemployment for the first time, increased to 242,000, which is the highest reading in 10 months. So remember what we talk about here. When it comes to unemployment, this is what the Fed is looking at to be able to cut rates. Unfortunately, they're looking for a recession. Right now, unemployment is at 4%, which is up, but still low compared to historical numbers. But if we see that trend continue with initial jobless claims showing higher and higher numbers, unemployment will increase, and that'll help us with getting rates lower in the future as well. As of right now, the Fed did have their Fed meeting last week, and they're pretty much only estimating one rate cut. So we went from, I think it was like 4 in January, which was the estimate, 4 rate cuts this year, to 3 to 2 and now 1. Unless something changes drastically, we're probably only going to be at about 1 or 2 rate cuts this year because we're already in June, halfway through. And that will help with the stability in the market. Of course, with the Fed funds rate coming down, doesn't necessarily 100% correlate with mortgage rates, but with the cost of money increasing, to borrow money back and forth with banks is the reason why we also see rates elevated as well. Price cuts on homes increased to 24% in May, according to Zillow, which is up from 19% last year. So basically anything that's listed, you're seeing 24% of those homes with price cuts on there. But that number could be a little bit skewed. It could be more so a strategy from listing agents, because the other number is that homes that sold above list price rose to 33% from 30%. So it probably could be that they're trying to start some sort of bidding war, going slightly below market to have people bidding and trying to get highest and best. I say that because that's something that I'm dealing with on a couple offers right now, where they're priced competitively. I think there was one where I think the listing was like at $495, and I think the highest offer is like at $525, and like $5,000 over appraised value. So it's a crazy different number, which we haven't seen in a while. But take that as an example to what will happen when rates come down, right? Also, lastly, VA came out with a temporary fix that allows veterans using the VA loan to pay for their agents' commissions if needed. So I know that we were worried and waiting to hear from VA about how buyers agents can represent veterans in real estate transactions moving forward. They basically did come out with that temporary fix, allowing the veteran to pay for the buyer's agent's commissions as long as it's reasonable and relative to what the current market that they're purchasing in. So it can be an inflated number. But the only reason why it's temporary is only because they're going to be monitoring the market and kind of seeing where this new market leads into in terms of buyer's agent commissions and stuff like that. It's not temporary because they're going to get rid of it soon. It's temporary more so it's not an actual guideline switch for them. It's temporary relief to figure out how they can actually put this into guidelines and into play as the market continues to shift and move forward. Any questions? Any scenarios that you guys have? Any questions as it relates to loan programs, renovations, Hometown Heroes, things like that you guys have? Any scenarios that you guys went through within the past week?
Mike, the expense where the veteran can pay the commission, that has to be a part of their closing costs?
Yeah, it will be part of the closing costs, yeah, unless the seller is going to cover it. Yeah, we're about, what is that? About 2 weeks away from July 1st, where buyer's agent commissions are no longer going to show on the MLS. So if you guys are doing
August 17th. I thought August 17th is
August 17th is when the official
contract.
Yeah. But I think July 1st is when they are removing it from the MLS entirely. But August 17th is the day where it will be completely in effect, I believe. But even if it is August 17th, that is 2 months away. If you guys are already having buyers sign buyer brokerage agreements, and you want us, and you've already had the conversation with the client, you want us to add it to our closing cost worksheets. You guys know that we send out closing cost worksheets to clients on every single transaction, and on every single home that they want to put an offer on. So don't hesitate to, not even don't hesitate, you should be sending over that buyer brokerage agreement to me or to the team so that we can factor that in. As long as you've had the conversation with the client, it's just while we're explaining the closing cost worksheet, say, here, this is the conversation you have with the realtor about if you have to pay the commission, if this is what your all-in would be. If you don't want us to do that, that's fine. I mean, I suggest kind of, letting them know ahead of time, but we will factor that into the closing cost worksheet as long as you send us the buyer mortgage agreement that they signed. And that way it helps them understand their numbers, their all-in numbers at closing as well. So if you've already started doing that, send them over to us, so we can add those closing costs, add those into the closing cost worksheets, but, yeah, it's right around the corner now. Any other questions? Before we go, I do want to let you guys know if you're having, or if you're looking for a way to drum up business, you guys should have, and I'm already working on the Miami one, that Miami-Dade one, it's gonna take me a very long time. To do it, probably a couple months, but I'll have it done for you guys, as soon as I can. If you guys are looking to drum up business, you guys can attack the Fannie Mae approved condos, as listings. If you look at the expireds, if you look at the canceled, the withdrawn, all of that stuff on the condos that I sent you, you can attack those owners and basically leverage the Fannie Mae approved website for financing. So I'm still noticing that a lot of lenders and banks are still doing full reviews when they don't necessarily need to. But they do the full review, they deny the condo, and now the listing agent's only accepting cash or non-QM, and then they can't get the thing sold because there's a recertification. There's a lot of non-QM lenders that are not even taking condos that don't have their recertifications done. Just so that you guys are aware. So there's some that do relatively higher rates, higher down payment, right? The risk factor is there and stuff like that. But ultimately, there's lenders that are really not doing that. So if it's in the Fannie Mae approved list, I've told you guys multiple times, I don't care how many lenders declined it, as long as it says Fannie Mae approved on the website and it does not change, we're able to do it and just look at the master insurance policy, and that's it. So besides being on the buyer side, right, being on the listing side, those are phone calls you can make to the owners all day. You can target a specific city. I think the Broward list that I sent you is categorized by city as well. You can target a specific city and just call those owners, mail them, stuff like that. I can get your home sold by, with the buyer only coming in at 3% down, whatever the case is, and marketing to them and calling them will help you get some listings if you do it consistently for a month or two. And I promise you guys, if it's on that Fannie Mae list and it does not change before closing, because that's happened to me twice already this year where it does flip. If it does not flip, we will be able to get the deal done and closed by just looking at the master insurance policy, as long as the deductible is not so high, as long as they have 100% replacement costs, we're usually fine.
You sent us that list, Mike?
I did, yeah.
I see official Fannie Mae approved condo list 2024. So all
Yeah.
those, all they need to do is have a master policy, correct?
That's it. Yeah, master insurance policy with the deductible at 5% or less, and 100% replacement costs, and then of course the standard insurance that they're supposed to have.
So we just need to ask them to provide the insurance, the master insurance policy.
Yeah. Yeah, and that's it. So I think I might do it. I might create like a share drive for that, so that way as I update it, if I don't get all of Miami-Dade within the next couple of months, but as I update it little by little, as the weeks move forward, you guys will at least see the updated one every single time. So I might switch it over to a link and then just send you guys all the link. I'll do that. I'll probably do that. I'll try to do it before.
I'm a Miami-Dade girl.
Yeah. That way, as I update it, you may not have the full list, but if you get 200 condos in Miami-Dade, that can help you start to maneuver around, right? Because I think I did it. It was like thousands. So it was a lot. All right, perfect, Janelle. Okay, so I'll do that. I'll try to get it done by Friday. We won't have Monday Mortgage Minute next week, only because I will be out of town for the first vacation, technically second vacation of the year, but I'll be gone all of next week, but the team will be here. If you guys have any questions, any scenarios, you can always reach out to us. And of course, if you have my cell, I'm always going to be available either way. But that's pretty much it for today. You guys don't have any other questions or scenarios?
Okay,
All righty. Thank you all. Have a good one.
thank you.
Thank you.
No problem.